It is April 25th, 2014, current time 10:17 GMT. Jay Meisler here with the daily Forex trading outlook. It's Friday, markets have turned defensive, um, where it's now looking to cover its back because of the weekend and possible news out of Ukraine and possible retaliation, reaction by the U.S. with increased sanctions. In a market that should be looking ahead to a very active week next week, and I will discuss that in probably a weekend video. So let's quickly look at the charts on a Friday because it's a market driven by a search for protection, and what that suggests is if there are stops to run, the market will try to run them. So if we look at the daily chart, I've been pointing these levels out all week. 136.70 on the downside, 139.05 on the upside with the key level 139.67. That's your daily chart. Only break of either side of that would be really significant. Both are probably safe for today. So we go back to the 4-hour chart. And before I do that, I was discussing the daily. I've been mentioning the pattern, and I very much someone who favors patterns of 138 figure to 20, where it closed essentially with one exception to the downside on Monday for 8 days in a row. Yesterday it closed above 138.20, and you can see the euro has a little bit of a bid today. One warning also before I go on is that when you're in these tight ranges, small moves can really have an exaggerated impact. I mean, I woke up early this morning, euro dollar had been in a 10 pip range. I think it was 138.27 to 37. And now it's at 138.45, and it feels like it's moved 100 points, when in fact it's only extended its high by about 8 or 9 points so far. So just be aware of that and keep your emotions in check. If you look at the 4-hour chart, I point out these levels, 137.79 and 138.64. I've been mentioning them all week. The euro-dollar range has been less than 100 pips this week, and I don't remember a range for a week ever being that tight. I haven't looked back, but I can't remember when an entire week we've been within a 100 pip range. So as again, 138.64 is the key in the top. The downside is anywhere between 137.79 to 85 or so. So the downside is more protected. The upside, you might have some here at 138.55, and then 138.64 is the key level. 1-hour chart is showing the same thing, and the reason I'm pointing this out, we're trying to figure out where the stops are, because the market will try to go for them if they can. In any case, 138.50 is going to set the tone when we sit between 138 and 139. We've closed on 138. I think it's 11 out of the past 12 days, or so we've closed with a 138 handle. So that's it for today. You just have to cover your back and watch. Just keep in mind where the stops are today, because the market is going to do anything. It's going to go after stops. If it can't get them, it's just going to settle back into that 138.20 to 50 range, I guess. Only thing coming out today is University of Michigan sentiment, and you're going to have to watch stocks as a risk indicator. So as I said, nothing to get excited about. Defensive market. And I pointed out where the possible stop levels are. Now, one thing is, you look at the bottom of this video, I have an article, How to Survive When Prices Don't Move. It describes the current market and strategies you can use in this current market. You have to adjust to survive. If not, you're going to get chopped down. So I suggest click on this link. It's in the video, and see what I've written. It's worth pursuing this article, as it's you'll see some strategies you can use in the current market when prices aren't moving. That's it for now. Have a good weekend. We will touch base again either over the weekend or early Monday morning.